Today, I want to bring you from compliance to something totally different, to what we call tax planning. Because while compliance keep you in good shape, it helps you like remove any penalties from you. The IRS wants you compliant. So we there's no disagreement on this. But what we're trying to do also, not just to be compliant, but be proactive about our tax situation. So that's what I want to focus on today. What can I do different? So now this is the tax season. Everybody just filed their tax, like they compile their tax paperwork that they get from everywhere. They send it to their accountant, they file their tax return. But is there anything more that we can do to help us navigate the tax season and navigate our tax situation in a better way? Is there anything we can do legally while being in compliance, but is still save on taxes? So as you can see the sign, the IRS, like the sign says, it's all theirs, but it really doesn't have to. This is not the way I like everybody to look at. No, it doesn't have to be all theirs. So we say that there are two kinds of taxpayers. There's the ultra aggressive taxpayer, those that do mostly illegal stuff, those that do fictitious numbers on their tax return. They don't have bookkeeping. They may not even have a business, but they say that they do. They just claim expenses to take deductions that don't even exist. And this is one type of taxpayers. The other type is the ultra conservative taxpayer, the one that just panics by hearing the name of an IRS. No, I don't want anything to do with the IRS. Once they get a letter from the IRS, it's like the end of the world. Like they get very conservative, meaning that they lose on what they can. Like they don't know, I don't want to do anything that may upset the IRS. We don't want to upset them, but that doesn't mean that you have to be ultra conservative, missing out on savings that you are allowed to take. So that's our question. What type of taxpayer you should be? Should you be the ultra aggressive or you should be the ultra conservative? You guess. Of course, neither one of them. We want you to be the taxpayer that is aware of his tax situation, who knows what he can do to save on taxes and be better managing their finances. All right, so how can you keep more money in your pocket with strategic tax planning and organization? How can you do that? So there are 6 prongs to strategic tax planning success. Our password, 1, 2, 3, 4, 5, 6, starting with 1. First thing, if you can imagine how simple this is, get organized. This is just, you have no idea, just by having an organized bookkeeping, it helps a long way. You have no idea how many times I get a client that doesn't keep the books. Like they have just a bank account setting that has all their business along with their personal. They have tens of credit cards that they're using. They don't know which is business, which is personal. And the end result, they miss out on a lot of deductions because most of them, first of all, there is doesn't like mingling personal with business. And there's no documentation. There's nothing that shows which one is business, which one is personal. So most of the time you have to either use an estimate or you have to use a percentage, which is wrong. It's not right. So just by getting organized, you help yourself very, 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 like half the way. You help yourself very, very much. So first thing, and I have to repeat it and emphasize it many times, you have to get organized. It doesn't have to be like a very complicated. There is a lot of free softwares that can help you get organized. There are very cheap ones. There's even an Excel sheet, just by keeping your finances on an Excel sheet, but in an organized way, it helps you see where you are now, because you can't go one step forward without knowing where you're sitting now or where you're standing now. So that's the first thing that you have to do. First things first, get organized. If you haven't filed tax returns in years, you have to get those filed first before we do anything else. So get organized. I can't just emphasize it more. All right. Second thing, we have to review your past. So any person that comes to me asking for help or a new client, I usually have to ask them for the last 3 years of tax returns. Why I do that? I have to review your past. I have to see where you're coming from, what what you used to do in the past, what went wrong, or what is your tax situation? What were you doing in the past years to be able to assess the current situation? The current situation may imply new changes. So, okay, the past is something, the current could be something totally different. So we have to look at both. And the good thing about looking at the past is if I see something wrong, I can tell you, okay, maybe you can go back and amend the tax return and get some money. Of course, we have to weigh the benefits versus the cost and see if it makes sense. So that's the past, and then the current situation, as we said, any changes. And yes, sometimes I ask it, "Is there any changes this year from last year?" And they just casually say that he got divorced or something. There are different situations that happens that we have to know what's going on, what has changed from last year to this year. And with assessing the current situation, the changes that happen in your life and in your career and all of that, we have to understand your vision. We have to look at your goals. What are you trying to achieve? What you're trying to get to? And from there, we can implement the right strategies because there are tons of strategies available, but maybe some of them wouldn't align with your goals. Maybe some of them wouldn't align with your vision. So we have to see where you are now and what would be the right strategies for your unique situation. That's why it's kind of very, very dangerous to get your knowledge from general videos from Facebook or YouTube or TikTok or whatever. These are all good for you to be educated, but don't take it and apply it on your own. That's why the last thing is to continue the conversation. You have to take this to a trusted tax professional that you speak to, because they know how to imply the right strategy for you. They will tell you if it's right for you or not. They will explain why they're recommending such a thing. All right, so we came to the final stage of, or the last slide of my presentation today. What I wanted to get from this presentation today and from this live today is this. You need to start working on and being proactive about your tax situation. Don't wait until it's too late, until after year end, and there is nothing to do about it, and you just file your tax return and that's it. What you really need to think of and what you really need to change is to start to think proactively. Now we're starting a new year. Now we have new people in the office. Rules are changing and it keeps it changing. So very, very important now more than ever to hire a tax professional to be with you every step of the way, to tell you what's going to change, to tell you how you can adapt to all the changes and how would that affect you and whether you need to do something now or wait a little bit. So again, every tax situation is different. Here, I'm like inviting you to a free 30-minute consultation. The link is below. Please make use of it. And if there is anything I can help you with, let me know. All right. Thank you so much, everybody. Have a good night.